As I said earlier, the NSE 20, a whisker below its 2012 closing high, which was hit on March the 9th, and that above the 3,400-point mark. What's your perspective on the market activity that came through yesterday and the sustainability of any move beyond 3,400 points?
Thank you for having me on the show. I think what's happening on the equity markets needs to be looked at on a wider scale, especially looking at the interest rates environment, which you correctly mentioned that we expect no change by the MPC. But what's important is, at least for the local funds, have actually been more interested in the fixed income market as opposed to the equity markets, with the T-bills giving returns of 17% or thereabout, compared to getting high yields of 8% from some of the stocks on the Nairobi Stock Exchange. This has been a driver for the lower index levels, and also the mixed volumes in terms of high volumes one day, low volumes on the next day. And I think it's something that we expect to continue. Having said this, if you don't mind me going on, maybe we need to be looking at some of the counters that are undervalued at this point in time, in anticipation of when the rates are going to come in lower, at least towards the second half of this year.
Where are you seeing some of those undervalued stocks sitting right now? What's on your radar screen, Mbithe?
I think what's interesting is we've all been looking at the numbers of the companies, trying to see what the technical numbers are saying in terms of the intraday performance of the stocks, and also trying to understand the fundamentals of these companies. But I think also what's important is just beginning to understand the strategy and the people who are actually driving the strategies of these companies and essentially driving the numbers. Some key counters that have been very interesting and on the radar are counters like Uchumi, which was up 70% in the last 1 month alone. And what we are seeing is a lot of upbeat interest in this counter, especially from the foreigners, more so because it's turned around, it's sustained its businesses, it's going into the region, and it's getting into an expansion phase that will definitely be profitable for it. Another company that we are seeing not too much interest on, but is interesting, is East African Cables. And I think this is from a read across from Kenya Power and Lighting, which at some point will actually be enforcing its transformers with aluminium, and aluminium is actually manufactured by East African Cables. So a bit of uplift on that. And then maybe a final counter that would be looking interesting is the investments that TransCentury is doing, an infrastructure play in terms of its private equity portfolio, and it actually gives people, not only locals but also foreigners, an entry into the infrastructure play in terms of looking at sub-Saharan Africa at this point in time.
If we pick up on just one of those stocks, the likes of an Uchumi, for example, as you say, I mean, it's rallied 72.9% since February the 23rd of this year. It's sitting at a 9-month closing high. Just how much upside do you see, or how much more upside do you see there being to the stock? It's currently trading at about that 12.45 mark.
As I said earlier, I think we don't cover this stock, so I don't actually have a target price in terms of what would be an ideal entry level. But I think just looking at what the management is doing, and also looking at what the market players are actually pricing in, it means that it could probably have a bit more upside, because what we are pricing in today is based on what we know, which was last year their numbers were up, they were able to restructure themselves and get listed again on the Nairobi, not listed, the suspension abolished on the Nairobi Securities Exchange. But the question is, where are they going today, and do they have an able and willing management team, especially from the likes of the CEO trickling down to the person who serves you at the till? I think it comes about, and it shows that you have a very strong and willing team on the ground at Uchumi Supermarkets, and it's a team that's focused on customer centricity, a team that's focused on growth, and more importantly, a team that is actually on the ground in Tanzania and Uganda and looking to move into the next level. So it's something that would be of interest to you and could actually provide more potential upside from the current trading levels that we are seeing on the NSE.
Let's talk a bit about the stocks that have been most active over the last couple of sessions. I mean, BAT was the most active share at the exchange in yesterday's session. It firmed 0.3%. It closed at 286 shillings, and it's rallied 27% in 2012. That return obviously further juiced by the fact that we've had a final dividend of 27 shillings a share coming into play. To what extent are those more liquid and, you know, the bigger stocks stealing attention from these growth opportunities that you've highlighted in the less popular stocks, Mbithe?
I think if you're looking at some of the counters that have gotten interest, and again, it's important to look at the context of the NSC, which has highly been traded by foreigners, locals focusing on the fixed income market. But on the banking side, we're seeing a lot of traction on KCB. And again, KCB is another untold story that up until this point in time had not essentially been looked at in terms of what was management doing, what was their strategy. Everybody just kept looking at the numbers and saying, oh, maybe these guys are not profitable, or probably they're highly inefficient, etc. But we've seen, because of the kind of management and leadership that they have, that has, the bank has actually been able to deliver the most profitable numbers, at least in the last year. And we expect this to continue because of the thinking at the executive level that is transcending down to the lower levels. I think you look at KCB, then there's also a lot of interest on the construction sector. I think if you speak to a couple of players, there's definitely the key risk of inflation and a stalemate in terms of building plans that have already been approved but may not be able to get the necessary financing. Yes, there'll be a backlash on this, but we're also seeing infrastructure spend and a lot of development spending by the government, which at least makes up about 20% of the overall spend and is growing. On this end, we are seeing a lot of interest on Athi River mining following the recent results that were announced. And I guess the market is actually pricing in the Tanzanian cement plant, but though there's a risk of the timing of when this capacity comes on board. But nonetheless, there's been interest on Athi River mining. Bamburi also becomes very interesting. A bit of upside on that stock over the last month, closed at about 150 during the month of March. Still a dividend play story, and in a company that's also expanding its running capacity, at least over the next 12 to 18 months.
Well, for now, it seems that Athi River Mining is certainly the clear favorite. We've had Athi River Mining trading 0.4% higher for the 12-month period through to today. Bamburi Cement 8.7% to the downside over that same period, while Portland is suspended and has retreated 35.8% over the 12-month period. Mbithe, let's leave it there. Thanks so much for your insight this morning. Mbithe Muema is Equity Research Analyst over at Renaissance Capital.